Welcome to Investors Insights. Our topic today is travel and inflation. And I'm thrilled to tell you that on February 18th, we started our 17th year celebration here at Five Plan Partners, our anniversary. And it's just amazing what's happened in the past 17 years. And if you told me in 2005 that one day we would be doing vlogs to give information to our clients, I don't know if I would have believed that. But I am thrilled to have with me today distinguished colleagues, Trey Booth, Ty Miller, and Adam Van Zandt. And they've got some great topics related to travel and inflation. What a combination. But we want you to understand why that is so important. So with that, Trey, you started off the meeting just talking about inflation, a big topic with our clients, and elaborate on what travel and hospitality has to do with inflation.
Absolutely. Thanks, Greg. Yeah, we've been talking on this vlog and around the office for months now about one of the drivers of inflation has been that the U.S. consumer has been spending, which is great, but they've been spending on goods over services. And goods is very inflationary. We've shown charts going back months and months that shows that there's been a spike in goods spending over services. And that's largely inflationary because you have to ship goods, you have to store goods, goods have to be imported, and we've got a huge supply chain issue which is driving up prices. And so one way that can be fixed that the Fed really has nothing to do with, that may have an impact on inflation, is we feel like the consumer needs to be spending more money on services, on getting out of the house, on going on vacations, travel, eating out. And so we've been watching that data very closely, and we got some really good news. I want to pull up this chart. To start the year, we really had a drop in the consumer spending money on services. They actually spent more on goods. And we saw a drop in restaurant bookings through Open Table, and we saw a drop in TSA throughput. So people were traveling less, people were going out to eat less, and that's why that's one of the leading drivers potentially, and why we've seen inflation. We're starting to see that trend turned up, and the reason we like to watch this data is because it's very now. It's not as much looking backwards. A lot of the data we look at from a GDP standpoint, job standpoint, is months in the rearview mirror, quarter in the rearview mirror, sometimes a year in the rearview mirror. This is real-time data. So something that could be an early indication of future inflation dropping. If the consumer continues to increase their spending on services, reduces on goods, we may see some bottleneck. And the good news is, it's not that the consumer is drying up spending. It's just where they're spending could really help inflation. That would reduce the Fed's need to be very hawkish and raise rates and really slow down this economy.
Trey, I thought that was very insightful. Really appreciate the insight and research on that. And Ty, you confirmed to us the consumer is still alive and well. They're out there spending money. Is that correct?
Yeah, it's almost the return of the consumer. So we got some disappointing data in December, if you remember correctly, that we talked about on this blog regarding retail sales. Well, one thought process through that was that maybe the consumer was buying in October and November due to the assumed supply shortages, and people were worried about getting their Christmas gifts on time. And that theory kind of played out. So January saw a 3.8% increase in retail sales. That's the fastest gain since March of last year. And we're up 13% compared to a year ago. So consumer is back and better than ever.
So on that note, we need to say we're thrilled that the consumer is spending money, and especially on those consumers that are planning that summer vacation, planning on taking those trips that they've got to make up for that they didn't get to go on COVID. And believe it or not, folks, travel and hospitality might actually bring inflation down. Did I hear both of you correctly on that?
You got it.
Exactly.
Yeah, that's what I thought. And then Adam, the information you provided in our meeting was outstanding. I think it's some of the best you've given. I really want your insight shared here with our group and our viewers in regards to the technical analysis, because this market has been very volatile here recently.
Usually on these vlogs, we like to give a weekly, or what we call a short-term resistance and support level for the S&P 500. On this President's Day, I want to do something a little bit different and give you a more intermediate support and resistance level. So what we're looking at currently is an intermediate resistance level of 4,630. We're looking at intermediate support level of 4,280. Now, what that means is if we were to break through either to the upside or downside, that could indicate more of a bearish tone if we cross through the support level and more of a bullish tone in the markets if we cross through resistance levels. So as the other guys shared some fundamental analysis, we also like to correlate that with our technicals and keep track of this as we move on, into the spring along into the summer as well.
And you tie all that in with information that Trey and Ty have given us. You start to see some things come together as we look down the road. We will continue this discussion on Facebook, LinkedIn, Twitter, our podcast. We are excited and honored to be working with you, excited to celebrate our 17th year here at Five Plan Partners as we start the week off on the President's Day holiday and go on forward throughout this week. It's not going to be dull, but we're going to keep you informed. Have a great week. Take those trips, plan those trips, and we look forward to talking to you soon.